all, thanks for clicking. Welcome back to the Self-Learning Corner. If you people are new here, then welcome to my YouTube channel. In this video, we are going to talk about the previous year MCQs of Lecturer in Commerce kpsc exam. And the question paper code was 233/2015. So let's begin the session. First question. The device or process by which a person tries to reduce tax liability or incidence of tax through dishonest, falsehood, and illegal ways. And the options are tax avoidance, tax evasion, tax planning, and tax reduction. So, what is tax avoidance? It is generally a legal method to minimize tax liability or to avoid paying taxes legally. They can use tax credits, deductions, exclusions, mainly loopholes. And using these strategies can help them either avoid paying taxes altogether or lower their tax liability. And what do you mean by tax evasion? Tax evasion is completely illegal way to minimize tax liability. Mainly they are applying fraudulent techniques like deliberate understatement of income or inflating expenses like that way. It is an unlawful attempt to reduce one's tax burden. And the main motive of this is to showing a low profit in order to avoid tax burden. And it's completely legal, and we can say that making false statements, hiding relevant documents, and not maintaining complete records of the transactions, and concealment of income, overstatement of tax credit, like that way. It is a crime for which the SSA could be punished under the law. And tax planning is the process of analyzing one's financial situation in the most efficient manner. And through tax planning, one can reduce one's tax liability in a legal way. It is completely legal, and mainly to avail various exemptions and deductions, and we can do this. So tax planning is completely legal thing, and through tax planning we can reduce tax liability also. And here they have asked about the device or process by which a person tries to reduce tax liability through which way? Dishonest, falsehood, illegal way. Illegal, completely illegal is the tax evasion. So here the answer is tax evasion. So what is competition? And next question, Competition Act. Competition Act passed in the year. Okay, which year the Competition Act is passed? And answer is 2002 actually. And what do you mean by Competition Act? It is enacted by the Parliament of India and which governs Indian competition law, and it is a tool to implement the competition policy, and at the same time it prevents and punishes anti-competitive business practices by firms and everything. And it is equally applicable on written as well as oral agreement and arrangement between enterprises or persons. So here the answer is 2002. Competition Act passed in the year 2002. And the next question, what do you mean by Kyoto Protocol? Kyoto Protocol mainly pertains to options are capital formation, globalization, environment protection, and unemployment reduction, right? Actually, Kyoto Protocol is an international agreement, right? And it mainly aims to manage and reduce carbon dioxide emissions and greenhouse gases. And it is an agreement under the United Nations Framework Convention, and it is mainly on climate change and adopted in the year 1997. And here the answer is environment protection. Kyoto Protocol pertains to environment protection, right? And the next question, Section 60 to 65 of the Income Tax Act deals with clubbing of income, aggregation of income, and both A and B and neither A or B. And here the answer is clubbing of income. What do you mean by clubbing of income? Generally, an SSC is taxed in respect of its own income, but there are some exceptional cases arises. In those cases, an SSC may be taxed in respect of income and just legally belongs to somebody else. We can say that in earlier days, the taxpayers made an attempt to reduce their tax liability by transferring their assets in favor of their family members. And In this case, the tax incidence falls on others like family members and or someone else, but the benefits of income is derived by them, or the benefits of this thing is leads to themselves. So to counteract such kind of practices, necessary provisions have been incorporated in sections 60 to 64 of the Income Tax Act. Hence, a person is liable to pay tax on his own income as well as the income belong to someone else with certain conditions, right? So inclusion of others' income in the income of the SSE is called clubbing of income, and such income which is included is called deemed income also. And here the answer is mainly clubbing of income. Section 60 to 65 of the Income Tax Act deal with clubbing of income actually. And the next question, the period of 12 months commencing on the first day of April every year is known as accounting year, previous year, assessment year, and financial year. What is the answer? Mainly the answer is assessment year, right? What do you mean by assessment year? As the question says, it means that a period of 12 months commencing on the first day of April every year. In India, the government maintains its accounts for a period of 12 months, that is from 1st April to 31st March every year. And here the answer is assessment year. For getting more previously solved questions of these kinds of lecture in commerce and also UGC Net Commerce, please do subscribe to this channel.